There's one mistake that will sink more deals than bad markets, bad tenants, or even bad luck. And if you make this mistake, you're over before your investment even starts.
Right.
That's what we're going to be talking about today on the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip people to not make those mistakes and instead invest wisely in both properties and peoples so that together we can build wealth while improving housing. I'm James, and this is my wife, Jessie.
Sounds so ominous.
Oh, yeah.
I'll share something cuter than that.
Okay, go for it.
So our puppy has been teething, and his teeth, like, they get wiggly and fall out just like little babies, and I had forgotten. I mean, it happened with Vinny several years ago.
Yeah.
But with Chuck, now his teeth are wiggly, and they come out, and I like to save them, and the kids think I'm so weird, but...
Not just the kids.
Well,
Yeah.
okay, you think I'm so weird, but it's so cute. Oh my
It's
gosh. And then
fair.
his big boy teeth grow in, and
Yeah,
it's like
that's
real.
fun.
Although the timeline for puppies is super fast. So like
True.
he's
It's like months.
5 months old. Yeah.
Yeah.
And he's already lost like all the front teeth on the top and bottom, and now it's like
And the
working
new
its
ones
way
even
back.
come in pretty quick, too.
Yeah.
Like with kids, you're like, they got those
Right, they lose it, and then there's a hole there for
for a long time.
all I want for
Yeah.
Christmas is my teeth.
Nope. He's like, yeah, I know. It's been fun to watch.
Oh, it is
Yeah.
fun. And of course he chews on everything.
That's true. That's
So
true.
amazing.
Well, maybe people can chew on this idea.
Nice transition.
Big mistake that that people make.
Big mistake.
So here's the big, huge. The core danger is that is this thing that can ruin your returns. It can even ruin your reputation.
Yikes.
It's pretty bad. So here's the deal. Like, as an investor, like, you can survive a bad quarter, but you cannot survive a bad sponsor.
Oh.
Yep.
All right.
Yep. Because there's a high opportunity cost to all of this, right? Like, not only could you lose your money, but it's tied up for a ton of years.
Mm-hmm.
And and if you've recommended this person to other friends and family,
Yeah. Then your
like, you have a
reputation is
reputation risk.
ruined. Yeah.
It's not good. So I know we tend to talk all about due diligence stuff on this podcast, but like, it's the thing as a passive investor. And so I will continue to harp on it over and over and over again. So in this case, what happens when you skip out on due diligence on the people side of things? Okay. So I've invested passively in a deal, and they weren't like not horrible, but there were some things that I just did not do the proper thing, vetting, that I got surprised by. Communication was the big one. Like, they never sent updates, or that's not true. They did send updates, but they had nothing to do with me as the investor. Yeah. And it was during the build stuff. Now that the build is over and it is being managed by a property manager, that manager is actually sending regular updates, which again is kind of useful. At least you're like, all right, things are happening. That's cool, I guess. Haven't yet to receive a financial update.
Interesting.
Which is like the
But
one
you
thing
didn't
care
ask
about.
ahead of time
Correct.
to know how
That's
they were
the
going to
deal.
communicate or what they were going to communicate.
Yep. Yeah, exactly. And I just think it just makes your experience as an investor so much better. Now, I'll admit, for some of my stuff, I don't tend to give, like, when we're doing flips, I tend to not give a lot of the financial updates, mostly because I'm also like, they're loans, but B, like, it's hard to give a financial number in terms of the budget. Hey, like, other than like, yeah, this is the budget, we're still going for it. And then at the end, I'll say like, hey, we either hit it or we didn't.
Yeah, I would imagine you give updates when something when or if something changes, or if something happens.
Often mine are all about timelines.
Sure.
Because like, that's the thing that matters most. And we got to do right now that the timeline's taking forever, but we talked about it on a previous podcast.
Yeah.
So that's part of the issue. So here's what professional investors do to make sure that that is good. Number one, they just investigate their track record, which, go to furlo.com/properties. You can see all of mine that I have bought, both present and not future, both present and past. Oh, man, wouldn't that be sweet?
That would be impressive.
Dang. And I have some high-level metrics for each of them. And if you wanted more information about them, like, we can share them. Some of them we talk about on this podcast as well, which that's not a bad idea. I should link them on there. But anyways, so you could do that. You want to verify the communication patterns. Again, this is one that I wish I had done.
Yeah.
Like how fast do they respond? How transparent are they?
Yeah.
And what's going on? So I know like for me, when people call and ask about the deals, I'm not instant on the spot, but pretty quickly, like, yeah, here's what's going on. Happy to get on the phone with people.
Or you're at least willing to share, like, I'll respond with some sort of response within 24 hours or whatever it is.
Yeah.
You know, a general rule of thumb. That way they know what to expect.
Yeah.
Yeah.
And it's important to understand how the sponsor makes money. Are your incentives aligned or not? I just had a really good conversation with a guy who's investing in a deal. Who that was one of the questions. He's like, "How are you making money on here? And the way this is worded, I want to make sure that it's all worded correctly."
Yeah,
that kind of stuff. Which I think is like he is
Smart.
a pro and he asked a great question, so I thought it was good. There's also things to look out for.
Yeah,
a big one would be someone who offers a higher preferred return to their investors. They're trying to dangle a carrot, which means the deal may not be great or they may be having trouble attracting return investors potentially.
How do you know that?
Because there's like industry standards.
Oh, so you need to research
if
what
they're
the
doing
standard
like a
is.
double-digit preferred return, you might be like, "Oh, that's weird. What's going on with that?" Or if they're like, "We're offering a loan and it's going to get you 15% interest," like, "Wow, that's not normal.
really great.
Tell me more." It does sound great, but it's also like, why?
Yeah.
You know, that kind of stuff. There's also the rise of Instagram syndicators. These are people who they're more like they're just making a ton of videos.
Yeah.
They don't necessarily have experience. I've seen this because the idea is you have a limited pool of friends and family. You have a virtually unlimited pool of not friends and family.
Right.
And so the question is, how do you make yourself known to that bigger pool of people? And so people who are just getting started will they'll start the bigger network thing. And so, but they may not have done a deal, or they're going to partner with someone else who has done a deal, and they're just bringing in the funds potentially.
That's super interesting.
Just for flag potentially.
Well, how do you again, like, how do you know that?
Track record.
Oh, so you may hear about them on Instagram, but then you don't instantly reach out. You look them up and
or you
out
do
who
reach
they
out and you
are.
ask all those questions and learn about what they're doing. And you're going to find for a lot of them, like, yeah, I'm partnering on my first deal. Exciting. You go, okay, cool. Which I've looked at those kind of deals, and it's interesting. There are genuine like partnerships where you get someone like, yeah, this is my first time and I'm working with someone who's doing this. Sometimes you get it where it's a guy who's got a really good track record is essentially lending his name, but the newbie is doing all of the work.
Right.
Which is less compelling.
Yeah.
But that's a thing.
Yeah, they're just endorsing the person, I guess, kind of. But
And just another trend that's worth watching for is like what's going on with the markets. Like, are they creating are they going after riskier projects, trying to chase after yields, or just like, is the market conducive to it? So that's like, just got to be on your guard for that. So things you should always ask for. I bet you can guess some of them.
Track record.
Yep.
And
Including their failures.
Yeah.
Which, if you want to know about my biggest failure, listen to this previous podcast. I believe it's number 89. When I talk about how I invested in $1 into a property and ended up losing 14 grand.
So sad.
So there's my answer.
Yeah. But ask about their track record.
Yeah. What else?
Ask about like how they get paid.
Yeah, that's a good one. Yep. Fee structure.
Yeah.
Perfect.
Yeah. How are they getting paid? How am I getting paid? Maybe ask what they know about the market or.
Oh, yeah. Maybe potentially. Yeah. I had like ask about references from past investors.
Sure. That would be good.
Which I think would be good.
Smart.
Which now that we've had a few cycles go full cycle, few deals go full cycle, I should get some of those previous investors on here.
Yeah.
That I go, just listen to this
testimonials.
interview. Here you go. Problem solved. That's kind of my hybrid Instagram / real experience thing. So here's some questions that you can ask before sending funds. Tell me about a deal that didn't go to plan and what you did, which is not necessarily a failure, just didn't go to plan.
Sure.
Which for me, a lot of it's timelines don't go to plan. And how did you protect investor capital in worst case scenarios? Like for me, if it's a loan, it's personally guaranteed. So they'll get paid no matter what.
Paid back, yeah.
And then if it's more of an equity, longer term play, I'm like, that was a little bit harder, but I was super conservative in my underwriting, blah, 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 do things like that. And then another question to ask is, if I invest and you disappear tomorrow, what happens? Which I did have a guy ask me that. And he was like, this deal seems really dependent upon you. He's like, because you're the sponsor and you're managing it. Like, what happens if something happens to you? Which I was like, the answer, key man insurance. But even then, he did bring up some good points where I was like, I haven't fully thought this through. Okay, fine. Something does happen to me. The insurance is there, but like, now what? Somehow the investors need to somehow get together and make some decisions as a group, which is hard to do because I don't necessarily hand out the investor information.
Yeah.
But maybe I should. I don't know.
Or maybe you should have someone allocated as your backup or something.
Yeah, that's a good idea. Some sort of like the equivalent of some sort of last will.
Yeah.
Of like, here's who I'm.
Yeah, someone steps in and finishes out the deal
to manage, and they'll somehow get access to all my information and investor stuff.
Yep.
Yeah, man. I don't know. Those are good questions. Yeah, and just another tip is if it is someone brand new that you've never invested before, start small, don't go crazy.
Yeah.
Don't be like, here's all my money. It's all right.
Yeah.
So there you go. So I think my big takeaway is that the deal is not the deal. The operator is the deal. I think that's a new like one-liner. You know, we talk about the deal of a lifetime comes once a week. Fall in love with the deal, not the property. And I think it's just furthermore, the deal is not the deal. The operator is the deal. The sponsor is the deal. Like that's the thing that honestly is going to make or break it.
Interesting.
Yeah.
So fall in love with the sponsor, but don't because I'm married to the sponsor. So
yes, exactly.
just build trust with the sponsor.
We're gonna workshop that one
on a future episode.
Yeah, and kind of related to that, right? Like so here's an interesting thing that I've noticed in this latest deal that I'm doing. I've had a lot of questions about the numbers themselves, like the metrics that for me, like I find super interesting. They're good, like the cash on cash, the average annual return, the earnest money, the IRR. But I've talked to a lot of investors and they're like, yeah, I kind of know what that is, but not really. And so I'm actually trying to think through how do I change the way that I market my investments to people to like, yeah, the numbers are important and they should be there, but maybe that's not the top of the fold thing anymore. Interesting. It's kind of what I'm trying to figure that out because I've noticed it confuses people, which is a problem. And but I'm also like, you should know these numbers that are like they are important, but I'm also noticing, which tells me the numbers are not why people are investing with me.
Yeah.
Which is good.
I mean,
right?
what is it that people are wanting to know?
Well, I think a lot of them, they want to know that I've done the due diligence and I know what the numbers represent and I think they're good and they trust that I know what I'm talking about.
But they don't, if they can't verify it, then
yeah, that's hard.
They don't really know.
Yeah. So I don't,
that's where I feel like those testimonials, once you get some of those built up, like that could be above the fold. That way they're like, okay, cool. Someone else has done this. They went through the process. It was good. And then they still should know the numbers. And
right. Yeah. I've been playing around with the idea of what would it look like to write a short book that does.
I'm like, what do these numbers mean?
Yeah. Because I've talked about this with other people where like there's this one book. It's a really good book where it's like it's a book for passive investors and it's like 350 pages long and it's a textbook. It's dense. I mean, I was even like, I gotta slow down and take notes on this. And I know numbers and I like this topic. Yeah. And I was like, this is a lot. And and this is for passive investors?
Yep. Nope. I wouldn't have gotten through that one.
Yeah. So I'm kind of like, I think there's a middle ground between reading some Bigger Pockets blog posts and this book that I think that could be accessible and helpful.
I feel like, okay, what this made me think of was, I don't remember the guy's name. It's the guy who writes the comics, but he wrote about rocket science.
Oh, yeah, using the XKCD guy.
Yes, using like the top most common 100 words or whatever. Yeah. I feel like that's what you need to do.
The thing go upper was like what he called it.
Exactly.
Rocket.
That's what you need to do for the numbers. You know, it's like IRR is a normal person talking.
I like it. We're like having an on-air brainstorm. This is sweet.
Yeah.
Yeah. No.
I think there's
something
how would
there.
You describe that?
So no promises. It's not happening this year. I got way too much other stuff going on, but there's something,
I would find that very helpful.
There's something there that I think makes sense to make, yes, and accessible. Like, here's how I look at deals. Here's how I analyze them, but in for normal people, to understand.
Yeah, I mean, it's like essentially like the Robert Kiyosaki, how you define assets and liabilities. Like money in your pocket, money out of your pocket. Like that is a very easy concept.
Liability takes money out, just so you know.
To say like, okay, instead of using the terms asset or liability, you're going to think about it as it's either money in your pocket or money coming out.
What's a visual, like a physical visual way of thinking about it?
That's
one way.
A concept, yes. Okay. That's a layer of it, but also using terminology that's like money in, money out. I totally get those words.
Yeah.
Asset, liability. Okay. I don't know.
Right.
You know.
Okay.
Money in.
I like where your head's at. We're gonna keep talking about this.
Caveman.
I like it.
It's like caveman description. Anyways, that was a sidetrack.
Yeah. So that was good. So in conclusion, it's not about the markets and it's not about the property, and I don't even think it's about the debt terms and a lot of other stuff. I think like the number one thing really is that sponsor. And if you get that wrong, you're done.
Yeah.
It doesn't matter. None of the other stuff is relevant at that point.
Yeah.
So before your next investment, here's what you got to do. You got to ask yourself, do I know enough about the person I'm trusting with my money, or am I just hoping for the best? So that's
and if
the
you
question.
Don't know enough, find out.
Find out. Yeah. Don't just walk away. They might be awesome.
Do you have
me.
A resource that's like, here's the questions that I would ask a sponsor.
Oh, dude, wait till I lob that softball there. Why, yes, I do. If you,
I just feel like that would be super helpful for people. Be like, if you don't know what to ask this.
Yeah. So part of my Good Deals Only book that you can download, it's a whole bunch of questions. It's like 192 questions that you should ask before investing. The very first section are all questions you should ask the sponsor. There's like 8 sections. Yeah. And it's number one because it should be number one. And those are all great questions. Yeah, it's good. And I'm actively trying to answer all of them in a bunch of different ways. This is one of them. And whoever else you invest in should do the same.
Yeah.
So, yeah, that's the...
And if you don't understand what one of the questions is asking, contact James. And he'll give you, like,
I love
the easy description of what it actually means.
Yeah. I actually do for the top 40 questions. You don't even have to download it. I actually have an article that you can just access. All right there. So trying to make it easy because it's really important. So yeah, that's don't get lazy on the sponsor. Like that's the thing that you gotta be worried about. So with that, thanks for listening. And if you would like to learn about more about investing with us, you can check us out at furlo.com. You can see our whole investing thesis, what we're about, our track record, the works. It's all there. It's awesome. Again, thanks for listening. Have a great day.